In an astonishing turn of events, $700 billion disappeared from the US stock market in just 45 minutes. What caused this seismic shift? It was a sudden intervention by the Bank of Japan. By the end of this video, you'll grasp how a currency decision made in Tokyo set off a chain reaction, leading to a global equity sell-off. This is the dramatic unwinding of the massive yen carry trade, unfolding right before our eyes. So, why is this happening now? The Bank of Japan has made a bold move to tackle the extreme weakness of the yen. For years, the yen has served as the world's primary funding currency for the carry trade, where investors borrow in yen at low rates to chase higher yields elsewhere. But with the BOJ stepping in, this once advantageous trade is now a liability, forcing investors to sell off assets en masse to cover their positions. The speed of the crash was nothing short of staggering. In the first 30 minutes alone, $500 billion vanished, ballooning to $700 billion shortly thereafter. Major equity liquidations were reported across the board. The US dollar to Japanese yen pair plummeted, indicating possible intervention by the Ministry of Finance. Even private valuations suffered, with reports on X revealing that SpaceX's value dropped by an eye-popping $250 billion amidst the widespread market panic. Reactions poured in on X, and traders were quick to voice their concerns. Many likened this situation to the crash of August 2024, suggesting this could be just the beginning of a massive unwind. Charts shared by investors displayed the US dollar to Japanese yen dropping vertically, a clear sign of official intervention. One prominent trader pointed out that the market is facing multiple pressure points simultaneously, leaving no refuge for bullish investors. Institutional investors are on high alert. JP Morgan has issued a stark warning about a significant rebalancing sell-off, estimating that over $165 billion in equities will be offloaded in the coming week. This forced selling isn't just about the fundamentals of individual companies. It's a structural rebalancing triggered by the yen's decline. When the world's largest banks start assessing the fallout, it's time for smart money to pay attention. The Bank of Japan's intervention reflects a desperate effort to halt the yen's slide toward 40-year lows. By acting now, the BOJ and the Ministry of Finance are prioritizing currency protection, even if it risks destabilizing the global stock market. This highlights a crucial tension. Japan needs a stronger yen to fight inflation, but the global economy is reliant on the cheap liquidity that a weak yen provides. But the BOJ's intervention didn't occur in isolation. It struck a market already grappling with multiple risks. Analysts have termed this a triple pressure point event: the BOJ's currency move, sensitive US-Iran talks affecting geopolitical stability, and the massive equity rebalancing led by JP Morgan. This convergence of policy, geopolitics, and technical selling is creating a perfect storm of volatility across stocks, bonds, and even cryptocurrencies. For individual investors, the message is unmistakable: liquidity can vanish in a heartbeat. The interconnected nature of global markets means a policy shift in Tokyo can erase gains in New York in under an hour. Keep a close eye on the US dollar to Japanese yen level. If it continues its rapid descent, brace for further sell-offs in high-beta tech stocks. This is a moment for prudent risk management, not for reckless speculation. Looking to the future, we anticipate three possible scenarios. In our base case, volatility will persist as the JP Morgan rebalancing unfolds, leading to a turbulent market for at least a week. In the bear scenario, a continued yen surge could trigger a second wave of carry trade liquidations, pushing stock losses beyond $1 trillion. Conversely, a bull scenario could see the BOJ successfully stabilizing the yen without further crashing the Nasdaq, allowing for a technical rebound. The pivotal factor will be the BOJ's commitment to its currency strategy. To wrap up, the BOJ has instigated a significant yen carry unwind, resulting in $700 billion being wiped from the market, and JP Morgan is warning of more selling on the horizon. Keep a vigilant eye on Tokyo's next moves. If you found this analysis insightful, don't forget to subscribe for more insider perspectives on both the Japanese and global markets. Share your thoughts on the BOJ's actions in the comments below. Until next time, stay informed.